Hi, I'm Flip Padot. Welcome to Old Bull TV, your insider's guide to political prediction markets. Shares of Mike Bloomberg to win the Democratic nomination are on a tear lately, making him number 2 with the bullet, even as he's yet to appear on a ballot. So are the wee billionaire's prospects really that bright, or is this a case of an opulent campaign, or its nefarious backers quietly pumping money into the market to manipulate perceptions? It wouldn't be the first time. Let's find out. Let's shoot the bull. Bloomberg's odds on the PredictIt nomination market have more than doubled over the last month, from 10 well into the 20s, leaving him in a strong second-place position behind Bernie Sanders. He reportedly expanded his field staff and doubled his ad spending following the Iowa fiasco, apparently seeing eye to eye with this show, which confidently declared 2 days before Iowa that he'd eventually win the nomination. In that episode, Old Bull spoils the 2020 primaries. When Bloomberg was trading at just 18 cents, we reasoned that Bernie was rapidly consolidating progressive wing support, which, combined with Biden's limping into Iowa and New Hampshire, was setting the stage for Sanders to all but run away with the early delegate count heading into Super Tuesday. And since we know that the party establishment will do everything in its power to deny Sanders the nomination, even without Hillary guiding its hand this time, Biden's early exit gives the party plenty of time to rig up its only seaworthy lifeboat, the SS Bloomberg. Fast forward a week, at which point, in the interest of full disclosure, we've just followed our own advice and purchased Bloomberg shares at 22, so we did wait a full week for you to collect that first easy 20% of upside before getting in. Bloomberg has now spent his way to a double-digit national polling average, and 2 recent polls put him in 3rd place. Traders now have his odds in the 30s in New York, Florida, and Pennsylvania. Good for a combined nearly 700 delegates, those 3 states alone would make Bloomberg a credible convention floor contender if no one walks in with a majority. Now, naturally, the market's showing such high odds for a candidate who got into the race a year too late, who outright snubbed the pre-Super Tuesday states, and who, of course, is haunted by the New York City mayor's curse that disallows such office holders from ever achieving higher office, has bedeviled the professional forecasters. 538's Nate Silver set the stage back in November, just after Bloomberg jumped into the race, calling his PredictIt price, then just 13 cents, ridiculous. On the night of Bloomberg's absentee Iowa bounce last week, The Economist's G. Elliott Morris quipped, "PredictIt now giving Biden and Bloomberg the same chance of winning the Dem nomination. LOL, what could go wrong?" A few days later, CNN's in-house fortune teller herein saw Bloomberg's odds reach 20% and declared it nutty, decreeing the real odds were closer to 5%, though he acknowledged it was impossible to model. And yet, his shares have continued to rise, in stubborn defiance of all the experts. And it's not just forecasters scratching their heads. Many PredictIt traders are not only bemoaning what they see as overpricing, but wondering if the campaign might have a hand in it. Doma believes it's virtually certain that Bloomberg is buying up his own shares. Trader AG123 responded to Silver's incredulity, perhaps only slightly hyperbolically, explaining that Bloomberg was buying up $25 million of his own shares on PredictIt. David Pinson shares that theory, noting that it could be an attempt to leverage George Soros's theory of reflexivity. So let's talk a little bit about reflexivity. Reflexivity is the economic theory that there is a positive feedback loop between fundamentals and perceptions. In financial markets, if investors think prices are going to go up, they'll buy, which causes prices to go up, which boosts market sentiment, which makes investors think prices are going to go up, so they buy, which causes prices to go up, etc. The loop is unsustainable, so it leads to bubbles, crashes, crises, and other not great things. Expanding the theory to politics, if voters and donors and media perceive a candidate as more viable, they'll respond by favoring that candidate in their polling responses, their campaign contributions, and their media coverage, all of which tend to bolster that candidate's fundamental strength, and the cycle continues. It stands to reason, then, that a well-heeled campaign or its supporters might have an incentive to jumpstart this kind of feedback loop. Strategically, it's not that much different from selectively releasing one's most favorable internal polling data, pressuring supporters to goose your fundraising numbers just before a filing deadline, or Trump crowing about the size of his crowd at rallies. Perceptions feed fundamentals, and fundamentals feed perception. Except in politics, since the only measurable fundamental at the end of the game is how many people vote for a candidate, the sentiment, the perception, is the fundamental. So in theory, one could put a reflexivity bubble to one's electoral benefit without the inevitable burst. And if ever there were a time to implement such a strategy, with the party establishment growing increasingly nervous about Bernie's outperformance, and as Biden flames out and the panicky search for a credible moderate alternative kicks off, this would be it. And wouldn't you know it, we did see this very phenomenon play out in the 2012 presidential election with the so-called Romney whale. Business Insider reported a single trader lost between $4 and $7 million betting on Romney on the now defunct market InTrade in the weeks leading up to Election Day, with that trader accounting for 1/4 of all money staked on Romney over the entire election cycle. That report was based on a paper co-authored by Microsoft economist David Rothschild and Columbia professor Rajiv Sethi. The researchers acknowledged that Romney whale could have been genuinely convinced Romney would win, or could have been hedging and offsetting exposure in traditional markets. In other words, he expected a negative financial impact to his pre-existing holdings if Romney won, though neither of these possibilities fully explain why the trader didn't also avail himself of the lower Romney prices on rival markets like Betfair. Based on the trading patterns, Rothschild and Sethi conclude that this was more likely a deliberate price manipulation, not by the Romney campaign itself necessarily, but by someone who really wanted him to win. Perhaps someone with a significant positive pre-existing economic exposure to Romney's victory. So is it happening again? Are traders and everyone else consuming the market pricing data being duped? Perhaps more interestingly, is there an opportunity to soak the dastardly and deliberately irrational buyers from the Bloomberg campaign by taking the other side of their trades? Or is this simply a case where the market has tapped into something that the conventional wisdom hasn't yet? After all, the data-driven forecasters aren't shy about saying they don't know how to model a brokered convention. For the most part, they don't even try, and that they have a hard time quantifying the impact of an infinitely self-funded candidate running an asymmetric campaign. So which is it? Is it a pesky whale toying with our perceptions, or does Bloomberg's price reflect the market's genuine read on his chances? To help answer that question, we asked Rajiv Sethi himself, one of the co-authors of that paper, to take a look at the trading patterns in the 2020 nomination market to see if he could uncover any whale tracks. Here's what he had to say. First thing I would look for is order book asymmetry. You can see this in the presidential winner market. Order sizes are 10 times higher on one side than another, making it hard to bet against. Dr. Sethi actually flagged this on Election Day 2012 well before he decided to write the subsequent paper. You can see this drastic asymmetry with several outsized bids between 28 and 30%, helping keep the price above that apparent target level. Sethi continues, but to manipulate PredictIt, you don't just need money, you need an army of authenticated accounts because of the $850 limit. Not impossible, but actually easier for someone with broad-based support. So I'm a bit skeptical, but maybe that's because I see a path for him on a second ballot. I don't see evidence of manipulation in the nomination market, pretty symmetric order book, but of course there could be hidden liquidity. Indeed, with Bloomberg, we see a very normal, healthy, symmetrical order book. Sethi notes the possibility of hidden liquidity, meaning when someone sells into the highest bid, the manipulative trader immediately replaces the now depleted bid at the same price, effectively mounting a firewall without all the glaring evidence. Having kept an eye on this market in recent days, however, this does not appear to be happening. And if it were, you'd expect to see Bloomberg volume markedly outpacing that of peer candidates in the market. But, as Sethi notes, total volume going back the past couple of weeks doesn't suggest manipulation at all. Pete Buttigieg and Joe Biden both have higher volume. A few other considerations give us further confidence that there are no secret whales lurking in this market. Bloomberg's pricing has been fairly stable and rising gradually, unlike, say, Andrew Yang, whose prices are the widely accepted beneficiary of Yang Gang influence, frequently leading to wild Yang overvaluation, but interrupted by sharp pullbacks as the market overwhelms the irrational purchasing. Unlike InTrade circa 2012, PredictIt has over 60 markets tied to Bloomberg's candidacy, including one for each primary. Bidding up Bloomberg's price across this many markets requires not just money, but dedicated staff, bots, or both. Any reflexivity upside would be greatly outweighed by the terrible optics if the scheme were to be discovered, or maybe even criminal implications depending on how it was executed. As Sethi noted, because of the 850 position limit, this scheme would require what Sethi called an army of authenticated accounts, set up and tied to real eligible traders, significantly increasing the odds of discovery, making that risk-reward trade-off mentioned earlier all the less palatable. So, if there is no whale, Bloomberg will prevail. At least that's what traders are increasingly convinced of. And that's particularly relevant as New Hampshire heads to the polls. This is another potential short-term catalyst for Bloomberg shares to head higher. Bernie may well climb too after his widely expected victory, but among Pete, Biden, and Klobuchar, at least two are going to have existentially disappointing nights, and their subsequently dwindling odds can be expected to flow, at least in part, to Bloomberg. Just as important as predicting what's going to happen is predicting how the market will react to it. We all know Bernie's going to win New Hampshire. We think Pete will place second, but third through fifth are murkier. And in almost all the scenarios, Bloomberg's looking at some more upside. There's some very small risk that Biden way outperforms, which would punish this trade, at least in the short run, and perhaps a slightly greater chance that Buttigieg or Klobuchar outdo expectations, though that may just negate a further Bloomberg bounce rather than subject his price to any meaningful short-term downside. And as soon as New Hampshire is in the books, assuming they don't Iowa it up, all eyes will be on the Super Tuesday states. And if Bloomberg's blitz continues to pay off in polling in some of those key states, that only further serves to buoy his market prices. Now, we gave you a chance to buy a week ago in the high teens, but if you didn't, we think it's still a bargain here in the mid-20s. It's neither nutty, nor ridiculous, nor impossible to model, no matter what the experts may tell you. We do want to profit from your expertise, though, so connect with us on Twitter at OldBullTV to share your Super Tuesday strategies and any good conspiracy theories. Be sure to visit us at oldbull.tv, and if you haven't yet subscribed to this channel, for the love of God, do us both a favor and do so now. Thanks for watching, and we will see you next time.